investing friend of financial freedom. Welcome into Investors Club. Got a great show for you. Stablecoins are here to stay. Is Circle Internet Group the best stablecoin play? We will check it out. If you were a part of the club, you would have gotten this as one of the top 25 plays back the day after the day I IPO'd. So you could have gotten in way earlier than this. Let's check it out. Let's check it out. All right. So join the club in the description. Get the newsletter. Sign up for the free when you get the book to decide if you want to join. Get stuff like this before we talk about it on the show, plus access to all the portfolios and the Discord, all the stuff. So stablecoins set to 10x. Is Circle a buy? So we talked. So this is not the first time we've written about stable coins. A while back, we wrote about stable coins and how they have an important role to play in the future of finance. Why is that? Well, first, what are stable coins? Stable coins are cryptocurrencies that are pegged to real assets like the US dollar, for example. So one US dollar tether stablecoin equals one US dollar, or one USDT tether stablecoin equals one US dollar. And it's pegged there with algorithms that do things like increase or decrease the supply of the stablecoin. So it keeps it pegged right at $1. So you can see over the last year, USDT tether has gone between 99 and 101, right around $1 the whole time. So stable coins offer enormous advantages over traditional systems. We just saw one right there, didn't we? And that is the no major price swings. Sure, it went between 99 and 101, but Bitcoin is all over the darn place. If you're going to use Bitcoin to pay for something, it literally could have changed however much from the time you decide to buy till the time you fill stuff out. So no major price swings, huge problem solver. Number two, super duper cheap. So this is like the cost of electricity. There's no middleman. There's no bank or Visa or whatever taking a fee. There's no middleman taking everything. You have a digital wallet. Somebody else has a digital wallet, and it's however much electricity basically it costs to do that. It's just running code. How much electricity does it take to run that code? There's no middleman stealing everything. So these things have a big future, and for more reasons than this. They're also near instant. It doesn't take you 2 days to settle it or whatever. They cross any border, and this is one of the biggest use cases. They cross any border. There's all kinds of problems, regulations, currencies, all sorts of stuff. You got a digital wallet, somebody else does. It doesn't matter about any of that stuff anymore. Unbelievable, crossing any border. So for example, Western Union remittances. So if somebody from Mexico goes to the United States, works and sends money back, that's a remittance. And so Western Union, et cetera, now they've got a way better way to do it. Not now, they've had it for a little bit. Mostly are they doing it? Where are they doing it? Mostly on WhatsApp, as it turns out. Facebook's Meta's WhatsApp, and they're using Circle's USDC, as we'll see. And you don't even need a bank account. There are 1 million people in the world that don't even have electricity. 1 billion people in the world don't even have electricity. I think half the world might not even have a bank account. Half the people in Brazil don't even have a bank account, at least as of a year or two ago. So you don't even need a bank account. All you need is a digital wallet. These things are here to stay. And here is one of the biggest reasons they're here to stay, because they're being embraced by the budget-challenged governments of the world, which is like all of them, but most especially the United States government. Why is that? That is because these things are backed by a real asset. So in order for these things to be good, they have to be backed by real money. So what happens is, when somebody puts in $1,000, here's $1,000, give me $1,000, give me 1,000 USDT stablecoins or USDC stablecoins. What Circle Internet Group or what Tether's parent company will do is what they're supposed to do. We'll see that Circle Internet Group does it. Tether might, is they buy treasuries so that there's real risk-free US dollars backing all of this, so that so you put your money in, send it somewhere else, somebody else wants to change it out to their local currency, there's real money behind it. You said it was worth $1, it is. We have the money. So it's and as long as you do that, it's perfectly stable if you have a good network. And so it's backed by real assets. Tether buys up a bunch of short dated treasuries to back the coins. And this helps fund the government. How does the government fund itself? Partly by collecting taxes, but there's a shortfall between the budget and the receipts, the tax receipts. So they issue bonds. And if nobody's buying them, that's trouble. Then the next time they issue, it's at a higher interest rate. So they got to pay out even more. And it's a spiral. So this helps because it puts demand for treasuries, lots of demand for treasuries. How much demand for treasuries? It's big business at the end of 2024. Tether. Now, we've been talking all about Tether and not yet about Circle Internet Group. Tether is the biggest US dollar stablecoin, and it has some chinks in its armor. And the only other big player is Circle's stablecoin. So we're still mostly talking about Tether here for the moment. At the end of 2024, the big guy, Tether, had 113 billion worth of U.S. treasuries. Compare that to China's 767 billion that they accumulated over decades. Tether already got that, however quick, just in a couple of years, a few years. And $240 billion stablecoin market now. That's almost entirely Tether, or it's the lion's share is Tether and USDC, Circle stablecoin. But by 2030, that is supposed to be 2.4 trillion. So it's a 10x. It's supposed to 10x in 5 years the amount that is put into stablecoins. Blowing up, not hypothetical, not coming down the pike. It's here in full motion, blowing up in full motion. Tether's the largest one, had 13 billion in profits last year. How does it make its profits? Again, sticking its money. They're just giving money like a bank is, and then they can invest that money. Like when you put a deposit in a bank. And we're going to talk about this, and then do the people that putting the deposit in get anything back? We're going to talk about that. So they made 13 billion last year. The second largest US dollar stablecoin and the only other major player, and one with an arguably better reputation, is Circle Internet Group and their US. So USDC is the stablecoin. So Tether's the big one, the biggest one, with I'm going to make this larger and in charger. 155 billion in market cap, total assets for Tether. USDC 60.9 billion. Nothing else is over 6 billion. So those are really the only two big players. But USDC has the arguably better reputation. Circle is an ambitious company aiming at the top spot. Our strategy is to build the largest and most widely used stablecoin network in the world. So they're gunning for Tether, sort of. We'll see that they're going after two different avenues, two different client types. And this is also from their prospectus. The value of our Circle stablecoin network grows as more companies and services connect, including wallets and consumer apps, digital asset exchanges like Coinbase. We will see traditional exchanges. They've got a deal with ICE, not the ice in the news. ICE, and not the ice in your freezer. ICE owns the New York Stock Exchange, the international whatever, I forget. But they own the New York Stock Exchange, the biggest stock exchange in the world. So the stable coins could be making a play there, and it could be related to fixing the capital markets as far as using this blockchain technology to instantly deliver shares and track it instead of accidentally not being able to locate shares. But I digress. Custodians, blockchain networks and protocols, banks, neobanks, payment companies, market makers, and liquidity providers. So we said that Tether, we said that Circle is the arguably more reputable company, or that USDC is arguably more trustworthy than USDT. Circle stablecoin is arguably more trustworthy than Tether stablecoin. Circle has differentiated itself by inviting in reputable accounting firms from the beginning to verify their numbers, and they always put 100% of their money into the treasuries. So these things are backed; they're backed by dollars. This thing, I put money in, and I need to get. And as you said, this thing's going to attract dollars. So as long as you put it in dollars, everything's going to be fine. And they do. They put 100% of their stuff into dollars. And that is something Tether cannot say, at least with a straight face, because Tether does not do audit type stuff. And they got in trouble for saying that they put all their money into US dollar type stuff, risk-free treasuries, etc. when they don't. They put some of it into, for example, Bitcoin, looking for a higher return, higher than the 4% they'll get in treasuries. We want the 30% we'll get in Bitcoin or whatever. And so now they say our stablecoin is backed by 100%. They like real assets, but they're not allowed to say dollars anymore. So now they don't. And so that is perhaps an opening for the only other big and legitimate player. Although Tether does seem to be winning hearts and minds even more than dollars. So in Google Trends, Tether's lead there is even more than its market cap lead. But that points to a fundamental difference between these two companies. We said that they are going after two different types of clients. So Circle was backed by none other than the good people at Goldman Sachs, who do nothing but look out for you and me. And then it sold an enormous part of itself to Coinbase. So if you buy Coinbase, they own a good like 50% of this thing, along with the stringent voluntary oversight. So with the Goldman Sachs, Coinbase, and the voluntary oversight, Circle is focusing, it seems, on institutional adoption, whereas Tether is focusing on you and me, the everyman. Tether's CEO was bearish on the Circle IPO for this reason. So the big idea with blockchain is these banks like Goldman Sachs, I was kidding, by the way, when I said they have our best interest in mind or they look out for you and me. They don't. And so that's the whole thing about blockchain, getting these people out of our lives. And so the Tether CEO is saying, you're not going to make any money because you got in bed with these institutions. Institutions will betray you for one business point. And then whether that's true or not, one thing we agree with the Tether CEO, he said, we have the distribution no one else has. And distribution is it's all in many different things. It's all about distribution. But the idea is USDC, if USDT did back 100% in dollars, like so many other stable coins do, they haven't gotten the big network effects. So they don't have the big market caps of these two, but there's a lot of other ones. Well, why would you use one over another? And that's distribution, meaning like if you're on Coinbase already and you already have an account and you need to send some money, well, just log into your Coinbase account, use their stable coin, send some money that way. So they have the distribution. So that's the idea. If you have somebody in your ecosystem that they like to use and you offer this, now you have the distribution. Now they'll use your stable coin instead of somebody else's. And so Tether's saying we're already in at all these places. Everybody knows we're the best one, and we have deals with all the crypto exchanges, etc. It's funny because I kept saying they were making no money forever, and institutions will betray you. Is Circle making money? Yes, they are. We got to look at their financials as part of their IPO, obviously, but they did worse in 2024 than they did in 2023, and this is why with the enormous tailwinds of stablecoins. Stablecoins are blowing up, and how are you doing worse over time when there's so much, when it's just such a great environment? How are you going to do if things go bad? And so one answer to that, oh, by the way, we should look at short-term interest rates. If they're not making as much money, well, when they sit on the money, did the interest rates go down and now they don't get paid as much? No, they were almost identical over those 2 years, 2023 and 2024. And so it's this funny business arrangement they made with Coinbase. And so basically Coinbase gets the interest payments. So the beauty of the business model is people just hand you money and you get free risk-free interest payments just handed to you and you do nothing. What a beautiful business model. They gave that away to Coinbase and they just get a fee from Coinbase and some complicated whatever business arrangement. But they don't have that beautiful dynamic anymore. It seems that they gave it away in exchange for the distribution again of Coinbase. And maybe that could be a winning strategy, but the results look questionable. One further little blemish on Circle is the IPO. When you do an IPO, the price you get has a little bit to do with your force of personality, the executive's force of personality. If they play a little harder ball with the investment bankers, maybe they get a more favorable price. So when we see Circle price, its IPO price at $31, and now it's over like $214 last I checked, then we're seeing the insiders get a fraction of what the market was willing to pay. They seem to kind of got screwed. Are those the executives we want negotiating on our behalf? Now, one mitigating factor there is that they tried to do a SPAC, tried to go public via a SPAC last year, and that failed. So maybe they were a little hamstrung as far as price. So in the end, we will say stable coins are an interesting area, but Circle itself, especially at these levels now, I don't think so. I mean, they're in 2024, they had $1 of earnings, 70 cents of earnings, and they're at 214 now. And their earnings went down from $1.20 in 2023. So even if it was $1.20, you're paying 200 times earnings at over $200. So I just no way. But stable coins though, stable coins are good. If in case you didn't get that from this presentation, and so maybe Coinbase could be the play. They've got that business dynamic. They've got the Circle just kind of gave it to them. But the thing is, their returns are paltry. Their valuation is too high for our taste, and we're not sure if they have a moat. Can anybody just do what they're doing, or do they get a lead that can't be caught? I don't know. One thing that was incredibly good news for them is that, okay, so why would a person use one stable coin over another? Or why would you use Coinbase over Robinhood? Well, what if Robinhood says, if you put money in our stable coins, we'll split the interest payments with you. And now, if you have a choice, you would go to Robinhood instead of Coinbase. Coinbase is keeping all the money for themselves. Robinhood's giving half back to you. So when this legislation, the last I heard, it's in the Senate for these stable coins, one part of that these networks, these exchanges obviously argued for and got is that they're not allowed to give customers interest payments, so that way there is no competing to give the best service to people. They get to keep all the money for themselves. They're not allowed to give the money back. So I thought that was interesting. Okay, so if you like stable coins, which is the best play? We're just supposed to say we don't like Circle and that's it. That's it. No, tomorrow. And if you're in the club, you know what it is. Tomorrow we will talk about, or Monday, I guess. Monday we'll talk about what I think is the best stablecoin play. And it has to do with distribution being in an ecosystem that is just second to none. All right, my friends, great to see you. I will see you in the Discord. Have a great night. See you in the Discord.